Presented by the Bombay Stock Exchange. Presented by the Bombay Stock Exchange. IPF.
Welcome back. You're watching Financial Planner. I'm in conversation with certified financial planner Sumit Ved. Before the break, we were talking about stock markets and how investing in stocks is really not a taboo anymore. In fact, we get a lot of calls from young people, young working individuals who want to start off by investing in the stock market. So we were talking about how they should do their homework before getting going on that. But now let's take a query from one of our viewers. Remember, if you have a question, you can always email us at financialplanner@utvmoney.com. So Kaushal from Delhi wrote in. He says, and this is, I love this thing, email from Kaushal, because it's purely hypothetical. I don't think he has the cash right now from the looks of it. He says, suppose I have 5 lakhs. Okay. So I'm pretty sure he doesn't have the cash right now. But anyways, Kaushal has a hypothetical question, says that, suppose I have 5 lakhs, where should I invest it to get maximum returns with less risk in a year? And how much can we expect from the initial capital? And then he says, is investing in land better than putting your money in the stock markets? And if I'm investing in land, what should I keep in mind? So lots of good questions, Kaushal, but just to take you up on the first one, which is, he has 5 lakhs.
Sure.
Might have 5 lakhs, we don't know as yet. Where should he put it to get maximum returns with less risk? Is there anything like that you can get maximum returns with less risk?
I think it's a very fair question, especially in Indian context. We repeatedly see a lot of Indian investors, savers and customers have this perspective whenever they look at investing their money outside bank deposit.
Yeah, because we put it in savings and we get
True.
mutual funds.
True.
And
so as soon as you go outside banking environment, your point is, okay, I'm ready to invest, I'm ready to put my money, tell me what is the maximum return you'll get, and I don't want to take any risk. So one logic which we want to explain to all our viewers is that returns and risk go hand in hand. In fact, you are getting returns for undertaking the risk. Currently in a bank deposit, you get a certain interest rate, because bank deposit is guaranteed to a certain amount, not to the whole amount of your deposit by Government of India. There is a deposit guarantee insurance company, if I'm taking it right name, which guarantees that. As a result of which you get certain low return. As soon as you get outside bank, where people are not promising you any kind of returns, your risk goes up, but your return expectation also goes up. And you go more into a higher riskier assets like equity and many other places where you even get as high as 40, 50, 60, 100% return over a shorter period of time, your risk goes higher. So risk and return goes hand in hand, and one needs to become comfortable with this. There is nothing wrong when we say this is high risk, because historically it has been proven, if you have a long-term holding period, if you can stay invested in a asset class which is high risk for a longer period of time, you end up generating higher return.
Right, but over
There's
here,
no guarantee.
Yeah.
There's no guarantee.
But it is possible though.
It is possible. So you need to understand that logic first. There's nothing bad in risk till the time you understand risk, till the time you're comfortable with it, and till the time you say that, okay, I understand this risk, I'm comfortable in taking this risk, and I'm taking it in a known manner,
right,
in terms of generating higher return, which will help me live certain of my dreams which I've converted them into a goal for education of children, for buying of house, for my retirement, and I want to take higher return because I need to do that financial plan for myself.
Right, but Sumit, you said that it's okay to take those risks.
True.
But you should understand that you have to be in it for the long haul. But over here, Kaushal says, look, I have this money, I want something, I want something with maximum returns, but only in a year's time. Can you tell us, why staying in whatever asset class it may be? Is it a bad idea to stay in that for just 1 year? Is there anything that will give you phenomenal returns but in a very short duration of time? Is that possible, or have you seen historically that you need to be invested for the long haul to get those fabulous returns?
Okay, now this is a typical saving question.
Yeah.
It is not an investing question. Okay, and let's explain the difference between saving and investment. Saving is income minus expense. Investment is when you save for defined goal, defined time period, defined return and defined risk. So now the way Kaushal has asked this question, there is no goal attached.
Yeah.
Why does he need to invest? What is the end objective of this investment? How much amount does he need at the end of that tenure? And how much risk is he ready to take? Nothing is defined. So to us, it's a very saving question. That means he has 5 lakh rupees. He's trying to figure out what best can he do with it. So he says 1 year, give me the highest return. This is a typical problem which most of us in India end up doing when we don't realize that we are not investing but saving. So my suggestion to all, Get hold of a financial planner who will sit with you, articulate your dreams into goals like children's education, housing, retirement, marriage, vacation, buying of a second home, buying of a Harley Davidson or whatever you like.
Yeah, right.
You know, and attach, you know, time period to that, convert a goal and then decide what return I need and then choose the product.
Sure, yeah. And what about this question about, is investing in land better than putting your money in the stock markets, which, you know, like you said, traditionally Indians, we like to buy stuff. We like to buy jewelry when we have extra money. We like to go out and buy a piece of land or maybe an extra flat in Bombay if one can afford it. So what do you think, is there any right answer to that? Is land better than equity? Has there ever been a comparison between both that says, okay, put your money here, don't put it here?
So when we talk about equity, we have historical references. We have data point. We know there are stock exchanges which have, you know, listed equity. We have a regulator which is well defined in terms of trying to do that. Hence, we are able to answer this question if you ask us from a historical point of time, should I invest in equity? We'll say yes. If you say, I want to invest in equity for 1 year, then we'll say you're using a wrong word. You don't invest in equity for 1 year, you are trading in equity.
Yeah.
You can do trading, but trading is high risk. Okay, so if whenever you look at equity, look at long term, 3 to 5 year kind of an environment. So that's for equity. But as soon as you compare it with land, there is no historical data point. That means verified data point. Yes, land has appreciated. It has appreciated at different places, at different point of time, at different percentage, which nobody can articulate and thump the table and say, this is how land has worked, this is how land will work in future itself. It's the transparency of an asset class and the regulated asset class, which always makes me tilt towards equity versus land, you know, because equity as an asset class is very well defined, has an history, has stock exchanges, has large number of companies, and also has a very well established and very active regulator. Whereas whenever you come to land, it's basically history of friends and family which has really made money out of land. So can't answer that question, but my preference is all for equities.
All right, so let's take a quick break right now. When we come back, we'll talk about our next favorite thing. Sumit and myself will talk about gold. And if you have some extra cash, should you be putting your money in gold, or like Sumit pointed out earlier, should you be putting your money in silver? This is Financial Planner. We'll talk about that right after this.
The Financial Planner, presented by the Bombay Stock Exchange.
Welcome back. You're watching Financial Planner. Now let's talk about where you can put your money to make sure that you get maximum returns. We've been talking about that. But remember, the big thing is, of course, you must stay invested for the long haul. So the question, Sumit, right now is, you know, every day I come in and I host all of these different shows during the day. And we always talk about gold and silver and how those prices are going up. And despite those prices going to all-time highs, you know, silver touching almost $50 over there, and gold going up to $1,500 an ounce. What should one do? How should one approach these precious metals?
So, first thing, please don't invest in gold and silver just because everybody's talking about it, everybody's writing about it.
A fad asset, as it were.
True. And if it is a fad asset, this is almost the worst time ever to invest because everybody's talking about it. There is a saying in equity market, time will only prove whether that is true for commodities like gold and silver, but a saying in equity market is when everybody starts talking about equity, that's the time to get out.
Yeah.
Okay. So from that logic, I don't know whether this is the right time to get into silver and gold. Having said that, there is a definitive position of gold in portfolios of investors from a long term. You know, whenever I say long term, I want to indicate it's 3 year plus minimum. Every investment option which we have has to be fit into the goals, which is part of a financial plan. So let's say I'm planning my retirement, I'm investing part of that money into equity, part of money into fixed income. There needs to be some little bit of allocation coming into gold, purely as a hedge from a long-term perspective.
Yeah.
Gold is emerging out to be a hedge to volatility. Gold is also emerging out a hedge to very violent times, volatility in markets. It's an asset class which always do well when there is uncertainty in the world. And the way world is shaping right now, it looks like the uncertainty is going to continue for some period of time.
Yeah.
Either that is a financial uncertainty in terms of scam, or it is oil uncertainty, or it is a democratic uncertainty with so many revolutions going across the world. So these are uncertain times. Nobody knows how long are they going to continue. And whenever there are uncertain times, gold does well. Gold also has a very strong correlation to dollar. The dollar goes down, gold goes up.
Gold goes up. And so with all of these factors pointing towards gold continuing to rise, then, you know, one would say that, look, if it's going to go up, and I know that it's going to go up, then is this a good time for me to go to the jewelers and buy, I will be shelling out a lot of money for, let's say, a bracelet, but is it a good time for me to buy a bracelet at 80,000 rupees right now, knowing that it will go up to, let's say, a lakh 20 in the next couple of months? Wouldn't that be a good investment, or is that not the right way to approach it?
It's not at all the right way, because the way you are articulating gold investment is something like I want to, I need to. Wants and needs are very different from investment point of view. We are looking at a investment to achieve certain goals of my life, like retirement, like marriages, children's education, and I need to figure out within that goal how will a gold as an asset class going to help me achieve those. So you need to look gold purely from an investment point of view, and don't look at gold as an ornament, because there is wastage of gold, there is costing of gold which doesn't work out the way it should. You should look at paper gold from investment point of view.
Yeah, we've talked about that also, that paper gold is a better idea because you can have it with you. You don't have to worry about storing it in a safe deposit locker somewhere.
I will name a specific product which I want to recommend to a lot of people who are watching. There is a Reliance Gold Fund which is there, which is a fund structure based on ETF. Very convenient. You can do a systematic investment plan into this. Let's say you want to invest 1,000 rupees a month into gold. Just go and buy that product. Keep investing into it. In gold, remember one thing, it's an accumulation plan. What does it mean by accumulation? Is that even if you start doing your accumulation right now, 1 year down the line gold goes through a volatility, don't get worried. It can correct, it can come down substantially down. Your investment or allocation or accumulation, which I'm saying, should be for a longer period of time, because most of Indian families need gold at some or other point of their life, either in marriages or gifting someone. So whatever this gold accumulation plan is, whenever you need to buy gold, exit out of this gold accumulation plan, just go and buy gold worth that much amount.
That's a good idea.
It's almost not investment, but it is investment.
All right. On that note, let's take a break. We have to wrap up the show, but do remember, Financial Planner is back. We air Tuesdays and Thursdays at 5:30. For now, Sumit, thanks so much for coming in.
Pleasure.
And we'll see you guys on Thursday. Bye.